Hi, I'm Andrew Rosen, one of the partners at Diversified. Over the next few minutes, I will provide an overview of the global financial markets and our perspective on them. Most major stock markets extended their 2019 rally in April before tumbling in May. June brought varying degrees of recovery, with the S&P 500 index setting a new record high as U.S. stocks climbed. Global equity markets, represented by the MSCI ACWI index, followed closely. Most of the action was driven by the trade war with China. Trade talks deteriorated at the beginning of May, but were revived in late June as both sides agreed to return to the negotiating table. Judging by the markets, the setbacks, and eventual progress on trade negotiations whipsawed China more sharply than it did the U.S. China took a hit in May compared to the U.S., along with the notably larger rebound in June. Most individual countries enjoyed a favorable second quarter. In particular, a number of emerging market countries showed strong gains. However, China was one of the few exceptions. But China's outsized representation in the MSCI Emerging Market Index meant that emerging market equities, as a group, lagged developed markets. There's concern that the bull market in equities is on its last legs, the victim of a slowing global economy, the lagged impact of last year's interest rate increases, and global trade concerns. While the U.S. economy is hardly firing on all cylinders, we think there's still life in the global economic expansion. We expect corporate profits to continue growing, pushing stock markets to higher levels in the months ahead. We don't yet see the economic imbalances or outsized equity market valuations that normally bring on recessions and contractions in stock prices. Accordingly, we see no reason for undue concern. So thank you as always for your trust and confidence.